I've been trading for a long time, and one of my favorite things is and continues to be gold. And I want to talk a little bit about some of the key lessons that I've learned over my years of doing so. This might help some of the new traders who are fascinated with trading gold. It is a wonderful trading vehicle if you know how to use it, but it's kind of like that big bowl at like the party that throws everybody around. You know, it's really impressive when somebody can stay on there and ride it effectively, but it's really hard to stay on. Gold is a crazy volatile asset and moves very uniquely to some of the other things that are out there in financial markets. Let's jump into a couple key points to know when trading gold. The first thing I want to explain when it comes to trading gold is that gold typically makes the majority of its moves in very quick, short bursts. What I mean by that is most of the time, if you look at a weekly chart, which is what I've got pulled up here, gold actually goes pretty sideways. It just chops back and forth. And then you can see there are brief periods where gold makes massive singular direction moves, whether that be up or down. Gold typically goes into periods of large amounts of consolidation without much movement, and then perhaps like what we're seeing here recently, explosive price action in one direction that seems relentless at times. First of all, before we move on from this topic, let's think about the nature of gold and why this would actually make a lot of sense. Gold trades on fear, and fear is the key word for getting gold to really move one way or the other. And what I mean by that is if there are a lot of tense things going on in the world, like central banks hiking rates incredibly fast, and people afraid of a sudden huge recession or hyperinflation or war in the Middle East or war somewhere else in the world. The point is, these factors all have a common theme. Fear typically drives price of gold higher, but most of the time, we live in a world where fortunately, we're not constantly in chaos. It does seem like in recent years we've had a lot of chaos, but there's plenty of periods of time where the world is kind of, normal and not everything is freaking out and panicking, and those are going to be your range-bound markets. The first thing I'm going to say is that if you trade gold on a consistent basis, I know a lot of traders love to trade this uniquely, like this is the one thing they trade, you have to acknowledge which type of time you are in. If you're in a chaotic, high-flying environment, you're probably going to see gold rising. If you're in a very confident time, you're going to probably see gold ranging or even trending lower. One of the most obvious ways I could showcase my point here is let's think back to 2008. 2008, 2009, we saw the great financial crisis across the world. This was a devastating time when the world saw the US housing market blow up and, banks went under and the world got terrified. And following that period, we saw one of the most aggressive bull markets for gold that we've ever seen. In just a short, burst, we saw the price go from 690 or so here all the way up to 1900 in 2011. And then after things started to calm down for a number of years, you can see gold drifted back lower, range bound, didn't move a whole lot. So understanding your environment is incredibly important. In 2020, we saw something similar. Everybody got really spooked out about the idea that, the world supply lines were getting shut down due to COVID-19. And again, the market ripped higher for gold and then proceeded to, once things kind of normalize a little bit, consolidate and even go sideways for a number of years. Point number 2 on how to trade gold more effectively is knowing your fundamentals. Fundamentals are key when talking about gold, perhaps just as much as any other financial instrument in the market. Whether you're talking about the dollar, the S&P 500, gold is incredibly based on fundamentals in the market. So what I'm talking about here is things like interest rates, geopolitics, what the central banks around the world are doing. Are they cutting interest rates or are they raising interest rates? And other economic data. Are economies of the world looking strong or weak? Typically, weaker economic data or central banks that are looking to loosen their monetary policy is typically pretty strong for the price of gold, which is why we've seen things, ramping up here for gold just recently. We've seen central banks around the world looking to cut interest rates, and we see the economies around the world cooling a little bit. That combination is usually a pretty strong area for gold. We could also reference real interest rates, which considers inflation relative to the nominal interest rate set by central banks. Of course, the big ones here are looking at the Federal Reserve, the ECB, but also other central banks and other economies of the world, like not just the Western powers, like looking at China and looking at other key players on the board. The final thing I want to say when trading gold, here is a really important tip for you. Gold can often go much farther than you expect. and me for that matter. At the beginning of the year, I actually set out a target for gold around $2,280 an ounce. In fact, we'll roll the clip from that video when I said that going into the new year. The reason 2280 is my target is because the last time we broke a long-term high over here, we saw a move following that close above of like 13.8%. Now, this was back in 2020 when huge fear took over the market. So I think that 14% move is a bit aggressive in terms of what we could see this year. But again, many possible catalysts are looming under the surface. So for me, in terms of possible setups, what I'm looking for is if we did see a break of the highs and a close above this long-term high of like 2,060 an ounce, if we do start to see that come into play, this is a 10% move from the highs. So a 10% move approximately from this recent struggle high that we've had. We wicked higher, but I'd like to see if we were able to break that long-term high meaningfully of about 10% move, that would get us at around 2280 an ounce, which a 10% move I think is a reasonable expectation if we do see rate cuts or any sort of recession fears, election fears, etc. that we've talked about in this video so far. So at the time of recording this video, it's only April, so obviously gold could have much more room to go, but my target for the year has already been hit. That just goes to show, even after doing this for years and years, trading gold, there is much to learn, and it always can do more than you ever expect. That's the crazy component to trading gold, and I've incorporated that into my personal trading approach. And I would encourage people to consider this concept with gold too if you're going to trade it. It can go much further than people expect. So how do I approach that? Well, I usually, when gold is in a trending environment, I opt to trail stops, which means I let the market tell me when it's time to get out. So you can see I entered a gold trade back here and a second one on this pullback here, and my stop loss has been trailed consistently behind these market structure levels that I've shown across my chart here. And this is my current position on gold. I also have an oil trade. I could do a whole nother series on oil. Maybe I'll do that next. But for now, you can see I'm up pretty good on gold. This is GLD, the ETF that I trade to track the price of gold. But overall, you can see that spot price has just been exploding higher, and I do not know where the end of this trend is. That's why I trail stops. I'm letting this thing run, and I think that a lot of traders do the exact opposite when trading gold, and it gets them into a ton of trouble. Many times traders go exactly against the trend of gold, and that is one of the most dangerous trades in the market. That is only preceded. There's only one trade that I think is harder in the financial market, and that's shorting the equities market, stock market, NASDAQ, S&P, Dow. I find that to be one of the hardest trades in the world, but gold is a close second. If you're selling gold on a huge rip, rest in peace to you, and Godspeed. Anyways, hope this was helpful to you. If it was, make sure to hit that thumbs up button and subscribe. And if you want more fundamental data, I mentioned how key fundamental analysis is. We have a tool on our website, a1trading.com. We call it the Edge Finder, and the Edge Finder helps traders spot economic data, sentiment trends, seasonality, all sorts of good fundamental data. So if you'd like to trade gold the way I do, again, check out our website, a1trading.com, and learn more about the Edge Finder. Thank you guys very much for watching. We'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.